The second lesson is about real price action. Traders use the term price action to describe trading based off of the behavior of price. Price action trading is only valid to the extent that it is used to understand the mechanics of price movements. Price doesn't move because of candlestick patterns or indicators like pivot points or moving averages. Price responds to information acted upon by informed traders. The only thing that moves price is the orders placed by traders. Informed traders have access to privileged information, for the most part consist of central banks, hedge funds, and syndicate trading firms. These entities have massive amounts of capital, and in this fact lies their greatest weakness. When your position size is large enough, you cannot dump a market order onto the market because the average fill of your order will be so poor that your profit margin will be severely affected. These traders have no choice but to break their orders into multiple parts. This is where we retail traders and our tiny capital can capitalize on the actions of smart money. As we quickly enter and exit the market without fear of impacting price with our orders, we're able to profit off of the inability of these institutional traders to quickly take trades. The first thing to consider when looking for orders is the sentiment. This is where an understanding of economics and current events plays a role. Understanding the sentiment of the market allows you to anticipate the actions of big players, as they have no choice but to react to information as it comes out. We're looking for price levels where there are still outstanding orders in the market. These levels are often referred to as supply and demand zones. Supply zones are price levels where there are more sell orders than buy orders, and demand zones are price levels where there are more buy orders than sell orders. The supply zone is identified by a consolidation period, followed by a strong drop in price. A demand zone is identified by a consolidation period, followed by a strong rally in price. Sam Seiden from FX Street provides an excellent outline for identifying quality supply and demand zones. I'd recommend watching his webinars. I trade supply and demand zones differently than Sam, as I prefer to incorporate information and sentiment into the mix. I like to trade the newest supply and demand zones, as older ones may be outdated. This doesn't mean I ignore older supply and demand zones, I just wait for newer ones to appear at those levels before I take my trades. Not every zone is worth trading, and only experience will teach you which ones to trade.